What's up guys? Welcome back to the channel. For those who don't know me, my name is Jake, and on this channel we talk about finance and investing issues, and I'm pretty excited because in this video I'm announcing a new video series for my channel, and I'm calling it the Schwab 25,000 Brokerage Account Challenge. Or just Schwab 25K Challenge for short. Charles Schwab in no way is associated with me or sponsoring this video. If anyone from Schwab is watching, feel free to sponsor. And in the event you've seen other brokerage account challenge videos, mine's going to be a little bit different because I have a clear objective and a clear goal. I'm starting this challenge on January 1st, and I'm going to do it for 1 year, so through December 31st, 2021. And my goal is to double up my initial investment. I'm going to start with $25,000, and by the end of the year, my goal is to get a 100% return on my investment, finishing with at least $50,000. Now, of course, this could be a terrible year for the stock market. I have no control over that. So I do have a secondary goal. And my secondary goal is to outperform a simple low-cost index fund. So I'm going to start with $25,000 that I will be actively trading with, and then $25 in SWTSX, which is Schwab's total stock market index mutual fund. So if my $25,000 can outperform percentage-wise that $25, I'll feel pretty good about myself. Now, I do realize that $25,000 is a lot of money. I'm not trying to minimize this. This in no way is a rounding error. In one of my previous videos, I went over my investment strategy for 2021, and the vast majority of my holdings are just buy and hold long-term simple S&P 500 index funds. However, I want to create this video series. I want to give it a try. If it doesn't go well this year, then I know that I should just be a buy and hold investor. However, I feel being a little bit more active can yield me more money in the short term. And in no way am I trying to flex on people by talking about how much money I have. That's not my intention with my channel or these videos. I'm just trying to promote financial education, financial literacy. I've only been investing for 3 years, and I'm in my mid-30s. And I had an awakening where I said, I need to learn this. I need to take this serious. I don't want to work a day job the rest of my life. So I'm documenting and learning as much as I can to help other people save and invest their money. Definitely anybody can be a buy and hold long-term index fund investor. And with this video series, perhaps you can learn enough where you would feel comfortable buying individual stocks or potentially being a more active trader. And what exactly will I be doing in this video series? Well, primarily I'm going to be swing trading. Swing trading, I feel like, is something that it's pretty easy to grasp the concept. I can explain it real fast. Here is the stock price for Facebook over the last 6 months. And you'll notice that there's just this natural fluctuation of about plus or minus 5%. And it goes up, it then comes down. These 3 lines you're seeing, the purple is the 50-day moving average of the share price, the orange is the 100-day, and the red is the 200-day. So the share price just goes up, it then bounces off or breaks through the 50-day average, goes back up, goes down, breaks through the 50-day average, goes back up, goes back down, goes back up. Right now, it's actually gone through the 100-day average, so I would actually be interested in swinging into Facebook, holding it for a couple days or potentially a couple weeks, and then once it goes up a certain percentage amount, get out of the stock. And there are thousands of stocks on the New York Stock Exchange that you can pick from, and I just look for the simplest ones to swing trade. Here's another example. This is Intuit. This is a very profitable, growing company on a clear upward trend. You know, it kind of gets ahead of itself. It then pulls back, goes through the 50-day average, goes back up, goes back down, goes back up. Went up a lot. It then dropped down, and it hit that 100-day average, and then bounced back up, went back down, bounced back up. On my channel, I'm looking for this. I'll use other indicators as well, but this is just the easiest to understand. You buy when you're down here, you then wait for it to go up a certain percentage or so, and then swing out, look for the next stock. Here's another example. Here's Dell Technologies, clear upward trend. It punched through the 50 or 100-day average. Would have been a great time to swing in, and then goes back up. One more, this is Eaton Corporation. Once again, clear upward trend. It punches through the 50-day. This is a great time to buy. Goes back up, goes back down, goes back up. So when I say I will be swing trading, that means I will not be day trading. Nothing against day traders. You can make money day trading. I just personally don't have the patience or time for that. And I wanted to start this account with $25,000 to get around the PDT rule. If you're not familiar with that, I made a video explaining what that is, but you're not allowed to make more than 3 day trades in a 5-day trading period. I potentially could accidentally day trade if I enter a position and then sell a limit order to get out of it. It could trigger that same day, and I won't be watching it. So I wanted to start with 25K to avoid the potential of accidentally day trading without meaning to. And with day trading, you got to wake up super early. You got to study the charts. You got to be at your computer for like 3 or 4 hours in the morning. I have no interest in that. For swing traders and the market in general, most activity is occurring within the first hour of the public market's opening, and then like the last 30 minutes. That's when the highest volume of trades is occurring. As a swing trader, I'm going to ignore and avoid all that. I actually think the best time to swing trade in and out of positions is midday. During midday, that's when the markets are calmest, and ideally, I'm only doing about 20 minutes worth of watching the markets and research a day. And I want this video series to be for kind of like the average investor. Normal people don't have 3 or 4 hours in the morning to, day trade certain positions. That really is like a full-time job. But with swing trading, this is something you can do on your laptop during your lunch hour at work. I work full-time, I have a day job, so I'm excited to film this series and show that you can be an active investor and still outperform the market average. I also don't plan on using trading software to get in and out of my positions. I'm not opposed to people who use trading software. It's just, in my opinion, more than what is necessary. I can get in and out of market orders and limit orders using the desktop mobile browser. For Charles Schwab, their professional trading software is Street Smart Edge. Most YouTubers, I feel like, use TD Ameritrade's Thinkorswim. At some point this year, I will film some tutorial videos how to use Street Smart Edge. If you want to, you can, but I don't see the need to for this video series. Number 4, I won't be adding money to this account. I feel like it's very important to start with a certain dollar amount and then just rely on my transactions to grow the account. If I'm randomly putting in hundreds or thousands of dollars, then you can't really see how I'm measuring, or I can't really see how I'm measuring my progress through the year. So for that reason, all the money I start with, that's all the money I have to trade with for the entire year. Number 5, I don't plan on short selling. I'm not opposed to short selling. I just think short selling works best when you're day trading. When you're swing trading, I would rather just hold on to cash, wait for a dip, buy the dip. With short selling, there's also just a limited upside, and I just don't think it's necessary. Once again, not opposed to it. I think it's a useful tool, but I don't plan on doing that in this account this year. Number 6 might shock people, but I only plan on swing trading S&P 500 stocks. I only want to be getting in and out of proven companies that have proven business models, a customer base, profitability. I see people on YouTube day trading or swing trading penny stocks. These are junk companies that you would never want to be caught in long term, and I just don't. When trading, there's always this risk versus reward. And if you're trying to double up your money in a month, then yes, you're going to have to go to the penny stocks. But I'm more than happy with assuming a lower level of risk and a lower level of reward, just focusing on doubling up my money within a year. So any company that I end up swinging into is a company that I would feel comfortable holding long-term anyways. So on my channel, you'll never see me swinging in and out of, for example, triple leveraged oil and gas ETFs. Next, potentially, I will be trading on margin. Definitely, if there is a 10 or 20% dip in the market this year, I will be going heavy into margin. I made a video talking about margin and explaining it more in detail. I personally am not that worried about it, but if the worst case scenario does happen and I blow up my account, at least I can document that for you guys and it'll be a learning experience for everyone. And then finally in this account, I plan on selling put contracts, talking about options. That will be a series of videos that I will make later this year. Quick recap, if you buy call or put options, then you're leveraging your money, predicting where the market is going to go. So if you're buying a call option, then you're usually bullish on a stock. When you buy a put option, then you're usually bearish on a stock. I personally don't like buying options because the vast majority of options contracts expire worthless out of the money, and you paid a premium to purchase this contract, which is why I like selling options much better. This is where you write the contract on your terms. Someone then pays you for it. So if you sell a call option, you're bearish, and ideally it's a covered call, so you're holding 100 shares of that company and you're investing your own capital. When you sell a put option, you receive money from the buyer with the intent to buy 100 shares from them at the price that you guys agreed upon. And you would want to do this when you're bullish on a stock because you ideally don't want to buy it. You want to just collect the premium for the contract and then have the contract expire worthless out of the money for the buyer. However, when you sell put option contracts with a swing trading strategy, this actually works very well. Let's do an example. Let's say in October, Dell Technologies stock is doing pretty well, and I say a month from now, 30 days, I sell a put contract saying, well, if it gets down to the 100-day moving average, I will buy 100 shares of the stock to swing into, with the intention of swinging out of it a couple days, couple weeks later. Pending some catastrophic event for Dell, that's the only time where you would be trapped in that company, and I take that risk. There definitely is some risk associated with it, but I'm only going to be selling put contracts, once again, on companies that I feel confident that I would want to be holding these shares long-term anyways. I definitely can keep talking more about this, however, that's what this video series is going to be about. Every position that I buy and sell, get in and out of, I will explain in detail so that everyone can understand why I am doing certain things. So if you haven't already subscribed to my channel, definitely subscribe, turn on notifications, follow me on Instagram. I might post updates there when I get in and out of certain positions. Ideally, I will be updating you all at least once a week, but potentially 2 videos a week showing all of the trades that I've made and why I made them. Okay guys, if you're excited about this video series, give me a thumbs up so the algorithm knows it's good. In addition, leave me a comment or question down below. I'm more than happy to take other people's advice. However, if you don't like what I'm doing, then you don't have to watch these videos. What I'm doing is not for everyone, and I want to document this as an experiment to show if it is possible. Now, what I do this year, not everyone's going to be able to do, but I'm going to have some fun. This is going to be a good time. Until the next video, guys, take care.